110 permits cleared. $11 billion unlocked. The world's largest silver producer just restarted its engine and Wall Street has no idea. December 2025. While silver bulls scream about Mexico's mining death spiral, something extraordinary is happening 2,000 miles south of the Texas border. The government that everyone said killed mining, they just approved more projects in 12 months than the previous administration approved in 4 years. Zacatecas, the silver heartland, went from 25 stalled permits to just 5 pending. Sonora is monitoring 83 active projects. Durango and Chihuahua are processing environmental clearances for mines that haven't moved dirt in half a decade. Silver Tiger's El Tigre project, fully permitted. November 2025, construction scheduled for 2026, $87 million investment. 8.6 million ounces of silver over 9 years. Agnico Eagle and Teck Resources San Nicolás joint venture, $1.1 billion. Feasibility engineering advancing, permits flowing. Orla Mining's Camino Rojo, environmental clearance secured. Mine life extended 20-plus years. This isn't a rumor. This is Fernando Aboitiz, head of Mexico's Extractive Activities Coordination Unit, on the record. We inherited 176 stalled projects. We've resolved 110 of them. That's a 62% clearance rate in 1 year. But here's what nobody's asking. If Mexico just opened the floodgates on $11 billion worth of silver mines, why is the market still pricing in Mexican supply death? Because the narrative hasn't caught up to reality. Everyone's still fighting the last war. They're still reading 2023 headlines about AMLO's mining freeze. They're still assuming Claudia Sheinbaum would continue the shutdown. They're wrong. This is a 4-stage pattern that's played out in every major mining jurisdiction in history. Stage 1, resource nationalism kills investment. Stage 2, capital flees, analysts declare the country uninvestable. Stage 3, new administration quietly reverses course. Stage 4, production surges, catching everyone off guard. Mexico is deep in Stage 3 right now. The permits are flowing. The capital's committed. The bulldozers are ordered. But the market is still pricing Stage 2, the panic. By the end of this video, you'll understand exactly where Mexico stands in this cycle, which projects are about to break ground, and why 2027 could deliver the supply surprise that crashes the silver bull thesis, or gets absorbed so fast, it proves the shortage is even worse than we thought. Let me show you the pattern. It's played out in mining for 150 years, and Mexico is following the script perfectly. Stage 1, the golden age. A country discovers it has valuable resources. Mining companies flood in, capital flows freely, production grows, tax revenue funds, schools and roads. Politicians love mining because mining means jobs and votes. Silver, copper, gold, doesn't matter. If you can dig it, they welcome it. Mexico lived in Stage 1 for decades. From the Spanish colonial silver mines of Zacatecas to the modern industrial operations of Fresnillo and Newmont, Mexico was the world's silver factory. 2020, 212 million ounces. 2021, 206 million ounces. Stable, predictable, profitable. Then something shifted. Stage 2, the backlash. The public starts asking questions. Where's our share? Why are foreign companies getting rich while our water gets polluted? Why are mining executives in Mexico City wearing Rolex watches while communities near the mines lack clean drinking water? Politicians sense the mood. They pivot. Suddenly, mining is the enemy. Permits get delayed for environmental review. New concessions stop entirely. Existing operations face surprise audits, labor disputes, regulatory harassment. Mexico, under Andrés Manuel López Obrador, 2018 to 2024, was textbook Stage 2. AMLO froze new mining concessions, permitting ground to a halt. 176 projects sat in regulatory limbo, some for 6 years. The Mexican mining chamber, Chemimex, estimated the freeze cost the sector $4.5 billion in lost investment. Capital fled. Analysts wrote Mexico off. Too risky, they said. Regulatory nightmare, they warned. Mining stocks with Mexican exposure got hammered. Then October 2024, Claudia Sheinbaum takes office, and everyone assumed she'd continue AMLO's policies. After all, she was his protege. Same party, same ideology. Of course she'd keep strangling the mining sector. Stage 3, the quiet reversal. But that's not what happened. Within weeks, something changed. Permits that had been stalled for years started moving. Environmental approvals that analysts said would never happen suddenly got signed. No press conference, no big announcement, no declaration of Mexico is open for business again. Just action. Quiet, bureaucratic, unglamorous action. 176 stalled projects. 110 resolved by December 2025. Stage 3 doesn't scream, it whispers. And if you're not paying attention, you miss it entirely. Here's what's actually happening on the ground in Mexico right now. Zacatecas, the silver heartland. Zacatecas produces more silver than any other state in Mexico. It's where Fresnillo operates. It's where Mag Silver's Juanicipio churns out 18.6 million ounces a year. It's the geographic center of Mexico's silver industry. And Zacatecas was dying. At the start of 2024, the state had 25 mining permits stuck in bureaucratic purgatory. Projects worth billions sat frozen because someone in Mexico City wouldn't sign a piece of paper. By December 2025, 5 pending permits. That's it. Jorge Miranda, Zacatecas State Minister of Economy, confirmed the backlog was slashed in 1 year, not gradually. Not, we're working on it. Actually cleared. This unlocked a $6.5 billion investment pipeline in one state alone. The San Nicolás project, $1.1 billion. Joint venture Agnico Eagle and Teck Resources, 2 of the largest mining companies in the world, are advancing a joint venture in Zacatecas called San Nicolás. This project represents over $1.1 billion in capital investment. According to the CAMIMEX 2024 annual report, San Nicolás is currently in feasibility engineering, and that means it's not a dream. It's not a maybe someday exploration project. It's engineering, drawing up blueprints, ordering equipment, calculating costs. That doesn't happen unless permits are in hand or imminent. Camino Rojo, 20-year mine life extension. Orla Mining operates the Camino Rojo mine in Zacatecas. In 2025, they secured the environmental clearance needed to extend the mine's life by over 20 years. Think about that. A mine that was supposed to close in a few years now has another 2 decades of production. That's not a small permit. That's a massive regulatory approval involving water rights, tailings management, land use, environmental impact, everything. And it got approved. In the middle of the Mexico hates mining narrative. Sonora, 83 active projects. Sonora, in the north, is Mexico's other mining powerhouse. According to state mining authorities, Sonora is currently monitoring 83 active projects. Not under review. Active, drilling, developing, advancing. Silver Tiger's El Tigre, fully permitted for 2026 construction. Silver Tiger Metals announced in November 2025 that it received all required federal environmental approvals to construct the El Tigre Stockwork Zone silver-gold project in Sonora. This is an $87 million investment. The project will produce 8.6 million ounces of silver and 48,000 ounces of gold over a 9-year mine life. Operating costs are projected at $12 per ounce of silver equivalent. All-in sustaining costs, $14 per ounce. Construction is scheduled for 2026. Not proposed, scheduled. Silver Tiger's CEO Glenn Jessam has 29 years of experience building mines in Mexico. He's not guessing. He has shovels on order. The federal acceleration. This isn't just state-level action. The federal government is driving this. Fernando Aboitiz, head of the Extractive Activities Coordination Unit at the Ministry of Economy, told El Financiero that the Sheinbaum administration inherited 176 stalled projects. Through an accelerated review process, officials resolved 110 cases. Only 66 remain pending. Aboitiz said the government expects to normalize operations by mid-2026. That's a timeline, a deadline, not vague promises. Economy Minister Marcelo Ebrard, speaking at the Extractive International Mining Convention in 2025, confirmed the federal government's intention to accelerate mining permit approvals. He stated, "Securing supply chains is a national priority." Why the shift? Geopolitics. Mexico sees what's happening. The U.S. and China are in an economic cold war. Supply chains for critical minerals are fracturing. The U.S. needs friendly suppliers for silver, copper, lithium. Mexico is positioning itself as the answer, not out of charity, out of strategic self-interest. If the U.S. needs silver for solar panels, EVs, and defense systems, Mexico wants to be the supplier. That means permits must flow. What about no new concessions? Here's the nuance everyone's missing. Sheinbaum did say no new concessions. That's true, and it sounds bad, but permits for existing concessions, those are flowing. Extensions, approved. Operational improvements, cleared. This distinction matters. The market hears no new concessions and panics. But the $11 billion pipeline unlocked in 2025, that's all from projects that already had concessions. They were just stuck in permit hell. Now they're free. New exploration won't start. But production from existing projects, that's about to explode. So if all this is happening, why is the market still pricing in Mexican supply death? Reason 1, narrative lag. Financial analysts are lazy. They read headlines. They don't read Samarnat permit databases. They don't track state-level mining reports. They don't attend the Extractive International Mining Convention in Mexico City. In 2023, the headline was, "Mexico freezes mining." That narrative stuck. Even though reality changed in 2024 and 2025, analysts are still regurgitating the 2023 take. This is your edge. Information asymmetry. Reason 2. Scheinbaum's mixed messaging. President Scheinbaum has been careful with her language. In June 2025, she held a press conference where she reaffirmed, "There will be no new concessions." That quote circulated. Mining stocks with Mexican exposure dropped. But what she actually said, and what reporters missed, is that she's not issuing new concessions, but she is processing permits for existing projects to improve operations, manage tailings, extend mine life. To the public, it sounds like she's tough on mining. To the mining industry, it's a green light to advance existing assets. Reason 3. Everyone's expecting the worst. After 4 years of AMLO, investors are scarred. They assume Mexico will always be hostile. They're waiting for the other shoe to drop, the surprise nationalization, the sudden tax hike, the arbitrary mine closure. So when permits flow, they don't trust it. It's temporary, they think. It won't last. This creates opportunity. Fear creates mispricing. Reason 4. The projects take time to produce. Even with permits in hand, it takes 12 to 36 months to go from approval to first production. El Tigre gets permitted in November 2025. Construction starts in 2026. First pour, late 2027 or 2028. The market won't price in that production until it's actually happening. Right now it's invisible, but in 24 months, it'll be very real. Reason 5. Mexico still has risks. Let's be honest, Mexico isn't Canada, it isn't Australia. There are still risks: labor disputes, community opposition, water rights battles, crime in mining areas, the possibility that Scheinbaum reverses course. These risks exist, and they're why Mexican mining stocks trade at a discount to peers. But here's the key. The discount is too large. The market is pricing a 90% chance of failure. Reality is more like 40%. That gap is profit. Let's assume this trend continues. Permits keep flowing. Projects break ground. Capital gets deployed. What does stage 4 look like? Timeline, 2027, 2028. Production surge. El Tigre, 8.6 million ounces over 9 years. Call it 1 million ounces per year average. First production, 2027. San Nicolás, assuming similar scale to other Mexican silver projects, could be 10 to 15 million ounces per year once operational. Timeline, 2028 to 2029 if permits continue flowing. Camino Rojo extension, additional 5 million plus ounces per year for 20 more years. Plus, dozens of smaller projects advancing in Sonora, Durango, Chihuahua. Conservative estimate, Mexico adds 50 to 80 million ounces of annual production by 2028 to 2029 compared to 2024 baseline. Mexico produced 185.7 million ounces in 2024. If these projects hit targets, Mexico could be producing 235 to 265 million ounces by 2028. That's a 27 to 43% increase in 4 years. How the market will react. There are two possible scenarios. Scenario A, the bear case, supply surge, crashes price. If global silver demand is weaker than bulls expect, if solar growth slows, if EV adoption plateaus, if recession kills investment demand, then an extra 50 to 80 million ounces of Mexican supply could overwhelm the market. 2024 global deficit, 150 to 180 million ounces. Estimates vary. If Mexico adds 80 million ounces and demand grows by only 50 million ounces, suddenly the deficit shrinks to 70 to 130 million ounces. That's still a deficit, but it's manageable. Price pressure eases, silver tops out at $40 to $50 instead of running to $100. In this scenario, Mexican miners get rich. But silver stackers holding $50 physical get crushed when the price stalls. Scenario B, the bull case. Demand absorbs everything. If solar demand explodes, as the IEA projects, if Samsung-style solid-state batteries scale, as video 2 in this series will explore, if investment demand surges on inflation fears, then 80 million ounces won't be enough. 2024, deficit, 150 to 180 million ounces. 2027 deficit with Samsung batteries could be 250 to 300 million ounces. Mexico adds 80 million ounces. Net deficit, still 170 to 220 million ounces. In this scenario, Mexican production is desperately needed, gets absorbed immediately, and price continues climbing. Which scenario is right? Nobody knows. That's That's the honest answer. What we do know: first, Mexico is restarting production. Second, the market isn't pricing it in yet. Third, if you're a silver bull betting on shortage, you need to know the supply is coming. Fourth, if you're a contrarian, Mexican miners might be the trade of 2025 to 2027, the investment angle. If you're bullish on silver, you still buy physical. Mexican supply in 2028 doesn't help you in 2026. The deficit is now. Stack silver while premiums are reasonable, currently $3 to $5 over spot. But if you're playing mining stocks, Mexico is the opportunity. Here's why. Mexican silver miners are trading at 30 to 50% discounts to Canadian and US peers. Why? Mexico risk premium. Analysts assume permits won't flow. They're wrong. Permits are flowing. As these projects advance, construction starts, first production years, those discounts will collapse. A Mexican miner trading at 6 times EBITDA could re-rate to 10 to 12 times EBITDA once the market realizes Mexico is back online. Specific plays to watch, not financial advice. Do your own research. Silver Tiger Metals, TSXV ticker, SLVR. El Tigre fully permitted, $87 million capex, 2026 construction. MAG Silver, TSX, and NYC ticker MAG. Juanicipio already producing 18.6 million ounces per year, potential expansion. Fresnillo PLC, London ticker, FRES, largest primary silver producer globally, all assets in Mexico, benefits from permit thaw. Agnico Eagle and Teck Resources, San Nicolás joint venture, $1.1 billion project advancing. Orla Mining, TSX ticker, OLA, Camino Rojo extension approved, 20-year mine life. Watch for construction start announcements, stock price catalyst. First production dates, re-rating catalyst. Expansion permits, proves trend continues. So here's where we are. Mexico, the world's largest silver producer, just cleared 110 mining permits worth $11 billion. Zacatecas went from 25 stalled permits to 5. Sonora has 83 active projects. El Tigre is fully permitted for 2026 construction. This is stage 3 of a 4-stage cycle, quiet reversal. The government that everyone said killed mining is quietly bringing it back to life. Stage 4, the production surge, hits in 2027 to 2028. That's when 50 to 80 million ounces of New Mexican supply comes online. If you're a silver bull, don't panic. That supply is 2 years away. And if Samsung-style battery demand explodes, next video in this series, it'll get absorbed instantly. Keep stacking physical. But know the supply is coming and adjust your timeline accordingly. If you're a contrarian, this is your setup. The market thinks Mexico is dead. Reality, Mexico is waking up. Mexican mining stocks are mispriced. As construction starts and first production approaches, those discounts will evaporate. Here's your action plan. Step 1. Verify this yourself. Don't just trust me. Go to the CAMMEX website, Mexican Mining Chamber, Silver Institute World Silver Survey 2025, Company Investor Presentations, Silver Tiger, Agnico, Fresnillo, Mexican Government Mining Reports, Semarnat, Ministry of Economy. Read Fernando Aboitiz's quotes, check the permit numbers, look at the project timelines. Step 2. Position accordingly. If you're holding physical silver, stay the course. The 2025 to 2026 deficit is real. Mexican supply in 2028 doesn't help you now. If you're buying mining stocks, shift toward Mexico-exposed names that are trading at discounts because of perceived Mexico risk. If you're a trader, watch for catalysts. Construction start announcements, first production timelines, quarterly updates showing progress, Scheinbaum reaffirming support for mining. Step 3. Manage risk. Mexico is not risk-free. Labor strikes, community protests, political reversals, all possible. Don't go all in on Mexican miners. But a 10 to 20% allocation to quality Mexican silver names, that's a calculated bet with asymmetric upside. Step 4. Watch the demand side. This entire analysis assumes demand continues growing. If demand stalls, Mexican supply could overwhelm the market. That's why Friday's video in this series matters. I'm going to show you why traders are paying $8 premiums to fly silver from New York to Shanghai right now. If supply is supposedly coming from Mexico in 2028, why is the physical market in panic mode today? That Shanghai arbitrage story proves the deficit is worse than the data suggests. Even with Mexican supply coming online, we might not have enough silver. Final thought. The market is always 6 months behind reality. Right now, it's pricing in 2023's narrative. Mexico is dead for mining. Reality in December 2025. Mexico is back. Permits flowing. Projects advancing. $11 billion unlocked. By mid-2026, the market will catch up. Mexican mining stocks will re-rate. The discount will shrink. You can wait for confirmation and pay full price. Or you can act on the data now and buy the mispricing. Your call. That's the Mexico story. 110 permits cleared. $11 billion in silver projects coming back to life. The supply cavalry is riding in, but it won't arrive until 2027 to 2028, which raises the question, if supply is coming, why is the market acting like it's already in crisis? I'm releasing the next video in this series where I'll show you something nobody's talking about. Traders are loading silver onto cargo planes and flying it from New York to Shanghai because they can make $8 per ounce doing it. $8 premiums. That's 16 times normal. That's not a market waiting patiently for Mexican supply in 2028. That's a market in full panic mode right now. If supply is coming, why is physical so desperate? Subscribe and hit the bell. This series connects the dots between what's happening in Mexico, what's happening in Shanghai, and what's about to happen to the price. The Mexico story is just the beginning.